Good morning from ORTEX. Today is Friday, January 27th, and these are your data highlights. Shares of Bed Bath & Beyond plunged by 22% yesterday afternoon after the home goods retailer disclosed that it has officially triggered a credit default on some of its loans. The disclosure significantly increases the company's bankruptcy risk, as debt covenants often allow creditors to call for payment in the event of default or financial distress. Bed Bath & Beyond now needs to scramble in a desperate effort to avoid bankruptcy, which would potentially wipe out common equity holders in a restructuring. Short interest is now heading back towards 52-week highs according to ORTEX short interest data, with nearly 50% of the free float now held short. Chip giant Intel reported disastrous quarterly results yesterday evening, leading to a 10% sell-off in the after-hours session. The company reported a 32% decline in revenue, which led to gross margin falling off a cliff by 14.5 percentage points. Operating margin in turn plunged by 32.4 percentage points, and Intel swung to a net loss in the fourth quarter. As one of the few domestic chip companies that still manufactures its own silicon, Intel is encumbered with a high proportion of fixed costs, and low utilization at its factories has decimated profitability. Analysts have responded in kind, with many dropping their target prices but not going as far as to change their recommendations. Ross Seymour of Deutsche Bank and Harlan Sur of JP Morgan both dropped their target price from $32 to $28, and Blaine Curtis of Barclays dropped his target price to $27. Make sure to subscribe and come back every weekday for interesting data highlights from ORTEX.